stellar panel that we have access to today. Jan Geldmacher is the former president of Sprint Business, all the way through the recent $23 billion merger with T-Mobile. He's now a current operating partner at SoftBank. So we're thrilled to have him here as a complement to his participation in last year's Impact Global Venture Summit. We attracted 1,100 people, I think in part because of Jan's keynote on 5G. So Jan, it's great to see you again, and you can go ahead and unmute your microphone. That's great. We also have Jonathan Charles. He goes by JC. He's the investment director at Samsung Catalyst Fund. Eric and I, as we mentioned earlier, participated in the Kauffman Fellows Program. JC was also accepted in and graduated from that program. He's an expert in global corporate venture capital. And I was excited to have him participate today as a follow-on to an interview that I did with him, a one-on-one interview as part of our Impact TV session. So welcome, JC. Thanks for making time for us today. Appreciate that. And then Kelly Fontaine from Sendana Capital. Many of you may know Sendana. Kelly is an expert in investment manager selection that specializes in seed stage VC firms. They have a global set of LPs. Kelly is now a partner at Sendana Capital. I've had an opportunity to interact with her a number of times more actively over the last few months. And Sendana Capital is an investor in our Fund One. So welcome to Kelly. All right, well, let's look at quickly just the results of the poll, and then we'll dive into the Q&A with the panel. I think, as predicted, sort of most people don't understand that corporate venture is playing a role in about half of all venture-backed deals now. And so when we go out and invest, $10 to $15 million in companies, and that's followed by $241 million, mostly from corporate venture groups, obviously, we're getting visibility into an industry sector that we think is really interesting and ultimately elevating our investing IQ by learning where these corporates are investing and where they're acquiring companies. So thanks for your participation in the poll. Now let's shift to the questions that we put together for the panel today. All three of you operate in a global marketplace. Let's just discuss sort of the organization's priorities this year and next year, particularly given the impact of COVID. Jan, maybe you could kick us off just by talking a little bit about SoftBank's strategy and sort of, how you're operating given the impact of COVID.
Yeah, first of all, thank you for having me here, Jack. Hope the sound transmits well over the line. I'm sitting right now here in East Hampton, connected through a very shaky line, so I hope it stays stable for the meeting. So for SoftBank, I'm with SoftBank Group International. SoftBank Group International is the unit that holds some of our strategic assets, like the T-Mobile asset, the WeWork asset. We are invested into companies like Cybereason, Boston Dynamics, Fetch Robotics, Snapdeal in India, InMobi, Marketing Cloud application. So, all of our investments always have been at the forefront of, what the technology trend was heading to. It started with distribution and telecommunication, and then went rapidly into the AI area and the autonomous application area. And we have no reason to think that the investment strategy that SoftBank has chosen has to be changed because of COVID-19. This terrible crisis more even has confirmed to a very high degree that these investments are the right ones that we have done, and therefore we feel encouraged to continue on that path. Technology is changing the world, and technology is enabling us to stay connected and consume services in a more digitized world. And this digitization is actually driven or accelerated even through the COVID-19 crisis that we're in right now.
Mm-hmm. JC, what about priorities at Samsung? How are you thinking about things, and how are you operating in the current environment? What are priorities this year and next year for you at Samsung?
Yeah, thanks, Jack. And yeah, by the way, thanks for allowing me to participate today. Happy to be here. So like many companies, around the world, probably no surprise, we're working virtually. I know for a fact that Samsung, because we have many manufacturing lines, is carefully thinking through how to keep workers safe, keeping them spaced out, these kind of things. Probably nothing new, relative to what other companies are doing. But what I can tell you from the venture team perspective, because we've got offices, in Paris, Berlin, the United States, and 2 locations in Israel, and then of course back in Korea. We've transitioned, I think, fairly smoothly because we were already on Zoom calls a lot before COVID hit with our international team members. We're kind of used to that. The challenge, of course, is, how do you get comfortable in making investments when it comes to meeting new entrepreneurs that, you can't shake their hand, you can't go to lunch with them, get to know them better. I think we're actually just about to close, I think, our first deal just virtually meeting people. And so we're pretty excited about that. I think it's run actually pretty smoothly. It sort of helped that because of our extended networks, we, through friends of friends, we sort of knew the entrepreneur already. So that's an added bonus. When it comes to actually where we're investing and how we're thinking about it given COVID, I would say that, the reality is that we're very much a components company in addition to the mobile phones and the tablets and the TVs. We're the biggest semiconductor company in the world. And we think a lot about infrastructure. And we've done a lot of investments in the last couple of years in cloud and data infrastructure. So we sort of look at the world through the lens of not only the digitization of enterprise, which was sort of mentioned before, but what are your infrastructure needs when everybody's on Zoom? The kids are on mobile and console gaming. All these sort of applications is just skyrocketed from cloud and data center. And oh, by the way, all within the context of AI. So that's sort of how we're thinking about it. And then the last comment I'll make just quickly is, any new startup that we engage with, we definitely go through an added analysis. Do you have COVID tailwinds or headwinds, right? So cloud infrastructure, for example, you can argue has a lot of tailwinds, right? Because of the reasons already mentioned. That's kind of how we see the world given the COVID situation. We certainly hope everybody stays safe. And, at the end of the day, this hasn't really disrupted our investment patterns now that we move towards the end of the year here.
Thanks for that. Kelly, let's talk a little bit about Sendana. I know you've, let's see, I think you closed your next fund to fund. You've been interacting a lot with international LPs. I think you're viewed as a window and a filter into the top sort of micro VCs with your specialization in identifying seed stage, fund managers. Obviously, we're thrilled to have you as an LP. Let's talk a little bit about Sendana Capital's priorities this year and next year as you look at the micro VC landscape.
Yeah, so thank you for having me again. We have always had the investment thesis since Michael started this in 2010, which is small funds outperform and ownership matters. And we think it suits us for any economy, and I think especially important in this economy. I don't think the impact has been seen. We have yet to see. It's a slow drip. We haven't seen the impact of what's going to come out of COVID. You saw the immediate change in work from home and other opportunities, but we haven't seen the overall impact is our thesis about it. But so we're heads down sticking to our thesis, but we are monitoring our data much closer. Again, we have about 1,700 companies in our portfolio. We have concentrated portfolios amongst our managers, but since we've been around for 10 years, so we look at the data to make sure that valuations aren't changing, what sectors are growing, what geographies, really to understand follow-on capital and what's going on so we can alert our managers to what's going on. And one example is the number of seed extensions is up 2x this year. So we worry that there could be a wall of financing from the Series A. So there could be, some deaths in the seed companies that would typically get an A because there's going to be twice as many Series A companies next year. So we try to keep a lookout on the data and make sure our managers are informed and work with them on a plan with their companies. But again, for us, as far as new investments or our own investments, again, as you said, we closed our fund June 30th, and we're trying to get used to the Zoom diligence. We do a ton of calls anyway, reference calls, but it's very different. I think, if you're investing in a founder, you're investing in the business and the projections of the business and the market. investing in a manager is really investing in the people, right? It's investing in the partner. As much as you're investing in the founder at the early stages, it's investing in people as well. But when you're investing in a fund, it's a 12-year relationship, and you really want to make sure that you're in sync with the person. So we're still getting up to speed on that. But that's the only thing I would say that's really changed is our diligence process at this point.
Yeah, that's helpful. Well, speaking of sort of key industry sectors and focus by the investment community, Jan, at last year's Impact Global Venture Summit, your 5G keynote presentation was extremely, it was very well received. It was educational, informative, and engaging. What's the big deal about artificial intelligence and 5G? I mean, for those that are sort of, newer to tech investing, can you just sort of talk at a high level as to why these innovations, why these areas of innovation are so significant in your view?
Yeah, look, first of all, I'm really glad that what I presented on last year's conference that actually became true, because it was actually before the merger happened, and we were just predicting the merger to happen, and but it was not certain by all means at this point in time that it would work out. So I was convinced back then, and I still am convinced, that 5G is the key, of course, to everything being connected to everything or everybody. And basically all the AI-driven applications that we are investing into right now need a strong connectivity. And the more business critical applications become over time, the more critical the connectivity becomes. And 5G plays a very, very important role in that play. 5G is not only higher bandwidth and higher speed and higher capabilities and higher security and less battery consumption, but is also lower latency, which allows, for example, artificial intelligence-based applications to run on edge computing devices, for example, like robots. And this is kind of a key enabler that we believe this merger of Sprint and T-Mobile will deliver over the next couple of years, was an enormous synergy between the asset holdings that Sprint brought into the marriage and what T-Mobile had in terms of spectrum holding. And we already see today how that rollout of 5G services in a nationwide approach is changing the competitive landscape to a better. And I'm really happy that this happened, and really proud to have been part of that story. Now we believe that a lot of applications, a lot of new business models, many more than 4G has made flourish, will come out of the 5G rollout in the US. And therefore, it's also so important that the US takes the driver's seat position in rolling out 5G. And again, this merger will help to make that happen.
Mm-hmm. JC, let me transition to you. I learned a lot actually from the one-on-one interview that you and I did as part of the Impact TV corporate video series. What I find is that when we do these interviews, we're sort of, we're getting educated on sort of where corporates will be co-investing, how they're thinking about sort of, acquisitions. And we just sort of, learn about corporate venture in general. It was clear to me that of all the groups that I've interviewed, you have deep expertise in corporate venture. Can you give us a little bit of insight for those that are less familiar with the rise in corporate venture? What's behind that? Why are there so many new entrants, so many new, Fortune 500 companies that are getting into sort of corporate venture capital investing? Is it to access returns, innovation? Are they looking to have a positive impact on the world? Why are they getting involved in the early stages of financing for tech startups?
Yeah, Jack, let me know if I'm having any audio problems here. So I think, I don't think it's mainly about returns, right? There's a lot of the companies that are doing these corporate venture capital investments already have billions in revenue. I think it's really about the innovation, right? So I think this realization occurred, and if you kind of think about it, over the last 20 years, the
JC, just lean in. I think just lean in a little bit closer.
Okay, does that help?
That's better.
Okay, great. Yeah, I think it's about innovation. If you go back about 20 years, the velocity, or even before that, the velocity of the innovation around IT any kind of information technology has just exploded, right? And it seems to get faster every year. And I think corporates finally came to the realization that, we're big, we're giant, we're not as nimble. We may have great research labs, but the real cutting edge innovation actually can come from startups. In particular, I live in a world of core tech or deep tech corporate investing. And this still holds true, particularly, I think, for core and deep tech, that, tiny little startups that move so fast, and by the way, are staffed by very smart people. The kinds of startups we invest in are very heavy on PhDs, for example. So you can imagine the kind of innovation that they're thinking about. Our typical startups that we invest in are cranking out patents, in huge amounts. I've got one in my portfolio that's probably about 8-9 years old. They have over 300 patents in their space. So I think it's really about the innovation. And then the question is, okay, if we know the startups are innovating, how do we build closer relationships? How do we learn more about their technologies, without them having to expose all of their IP? And how do we get to a win-win? How do we collaborate? That can all be sort of, accelerated and focused on through corporate investing. So I think it's sort of a natural progression. IT gets faster, innovation gets faster, corporations, it's their duty to be a part of that, I would argue. And therefore, one of the tools they deploy is venture capital.
Makes a lot of sense. So, as we build out the financing food chain, I'm going to switch over to Kelly to talk about micro VCs, but you have sort of, SoftBank, largest, investor in the world, and significant, acquirer of companies. You have corporate venture capital that is looking to invest and acquire companies. And then sort of early on in the financing food chain, you have these micro VCs like Impact Venture Capital. And Kelly, that's really your expertise. Micro VC is on the rise. It seems as though there's the market's flooded with hundreds of them. And so, speaking of due diligence Zoom, I'm sure you might have a little due diligence Zoom fatigue from all the micro VCs that are out there. I think there's we're obviously excited because of the corporate venture that we've been able to pull into our portfolio and the early exits, which I think signal that we're tracking in the right direction. But I'd be interested in your view on the characteristics of successful seed stage VC firms. When you look at the patterns, because you've got a lens where you can literally look at hundreds of micro VCs, what are the elements, the characteristics of successful seed stage VC firms in your view?
So, the average exit in venture is $200 million. And so if you take that, it goes back to our thesis, which is we've stuck to, ownership matters and fund size matters. And so if you combine the two of those, then you're going to maximize your returns. But the ownership mattering is where you really have to dig in. The managers have to have the credibility to lead deals and to buy ownership. And so that's where we really see dig in and spend most of our time, is how these managers are thought of in the ecosystem. What is their wedge? What is their unique pull that, founders are going to recommend, their friend that's starting a company and going to give great references and suggest that the GP is used again. And so we really spend a lot of time on the value add of the manager, how they're perceived in the market, and how founders are thinking of them. So we spend a lot of time with founders and co-investors because, seed is still a collaborative space, and you have to be brought into rounds and you have to have people help you fill out rounds. So we really think, obviously it's reputation and what that wedge is and how you're thinking about it. And you're right, there's over 900 funds in the US. AngelList started something called a rolling fund. Those in a short period of time, there's 100 rolling funds on AngelList. So it's very, very noisy. And so I think it's super important to be authentic to a brand that you create, and that goes to what value you can add to the founders and to the syndicate. And so I think, that's what we really look for, is the people and diligencing the people, just much like you guys diligence founders. As much as an idea is great, pivots happen, and it's all about the person. So that's where we spend our time. Again, it goes back to the thesis though, and the math has to be there, where the fund size is appropriately sized for the strategy, and that the ownership targets are there as well.
Yeah, it's really helpful. We've had a big focus on, what can we do to get a significant ownership interest in our portfolio companies, and then really work hard after investing to introduce customers and other capital sources, and we're having some early success in those areas. Let's talk about industry sectors again, Jan. One of the things that I think has been interesting in the researching SoftBank is, focus on security deals and robotics and a number of other really interesting sectors. With the companies that you're working with, because you're playing a hands-on role to add value to some of the portfolio companies within SoftBank, maybe you could talk about sort of the industry sectors that are generally interesting at SoftBank to you. And I think it'd be great if you could just mention the SoftBank Opportunity Fund, just so that everybody gets a little visibility to that.
Yeah, thank you for that question, Jack. So first of all, my role is not investing, right? So I'm an operating partner. I basically come in after the due diligence, or maybe I'm part of the due diligence for certain areas. But then, my job is to try to create value with the company during the rather long phase that they are with us. So creating value is on my agenda. And I have a team of specialists and generalists to help in all sorts of areas. For example, when it comes to helping on the sales side, helping on the business development side, ramping up marketing, creating an environment where we can talk to industry analysts in a more professional way with the companies that we're working with, but also looking into production, for example, when that's relevant. For example, on the robotics side, looking into supply chains, helping them to reduce the bill of material. So all these sorts of things. And I have to say that my life has been enriched since I left the telecommunication industry, because now I've insight in so many different companies and so many different challenges that these companies are facing, and therefore I'm right now in the situation where I think, okay, the investments that SoftBank has done, we're going into the direction of mobility, telecommunication connectivity, for example, satellite companies. We are invested into robotics companies. We're invested into autonomous application, which also includes the robotics area, of course. We're invested into cybersecurity, and it goes on into, for example, WeWork. I'm right now working with WeWork to launch a new product, which is called All Access, which allows companies to leverage the 780, 790, 800 offices that WeWork operates around the world for a flat rate of $299. So sounds a little bit like telecommunication business model, and it is actually. So that's the exciting part of what I do. I wouldn't focus on only one industry, but on the variety of industries that SoftBank has invested into. Going forward, it will be very much artificial intelligence driven. I have to say that. Now, talking about the Opportunity Fund is, I think it's important. So this crisis, COVID-19, and what we have experienced here in the US, and me coming in from outside, I'm German, obviously, so I'm an external view that I still have. I was surprised and astonished and frightened by the things that we could see in this crisis during this time, not all driven by COVID-19, but it became obvious that the US has a divide, not only in rich to poor, but also a racial divide. And especially when you look into equity investments and support of entrepreneurs with background that is not white, we thought we need to do something here. And our chairman, Marcelo Claure, who himself was a Hispanic background, made the decision to set up a fund in that crisis time to go after and support entrepreneurs of color. And we have raised in a very short period of time $100 million from SoftBank as the LP, the main LP here. $100 million that will be invested only into entrepreneurs with a colored background, so Black background, Hispanic background, Native Indian, Native American background. And already in that crisis phase, everything by Zoom, everything through the channels that we're working on here today, we have already invested into 16 companies with that background. So I think that's a clear signal that it's enough talking. It's about doing something now here to close that divide that we are seeing in the country.
Well, I'm convinced there's a whole lot that we can learn from SoftBank. You obviously have a broad view into a lot of different opportunities, a broad view into major market trends and the shifting demographics of entrepreneurs. I've just to take a second here, Jan, I've just really appreciated the development of an active collaboration with you and the friendship over the last couple of years, and I'm thrilled with your recent addition to the Kornami board for you to take time on and join one of the boards of one of our early stage technology companies. I just wanted to take a moment and say thanks for that. Really appreciate it.
Thank you for having me, and Vali, thanks for having me on your team. I really enjoy it.
JC, we've got a couple of minutes left, and I got one more question for you and one more question for Kelly that I'm going to try and zip in here before my team gives me the hook off the stage here. It's been interesting to see Samsung's leadership role in identifying innovations that are addressing some of the world's largest challenges. I know you paid close attention to the UN Sustainable Development Goals. I also know that Samsung's involvement with the Extreme Tech Challenge is something that you're quite proud of. Maybe for those that are less familiar with the Extreme Tech Challenge, you could just provide a little bit of insight into Samsung's activities and role with ETC.
Sure. Yeah, thanks, Jack. Yeah, Extreme Tech Challenge is very sort of an interesting global startup pitch. I think it's actually the biggest one in the world. And what it is it's based on the UN 17 sustainability goals. Think of it as touching things like I've actually got the list here. Ag tech, education, fintech, particularly in developing countries. Healthcare, transportation, smart cities. And what we did was we modified those goals to make it a little more aligned with the world of venture capital and entrepreneurship. And Samsung is a steward of this program. It's actually a not-for-profit organization. Anybody can go to the website at extremetechchallenge.org. And Samsung is a steward along with other companies being involved, like Ford, ARM, Fortune 500 type companies. So I don't want to claim that it's just a Samsung thing. We're simply a steward. And what we do is we set up pitches all around the world, everywhere from Indonesia to India to Korea, the United States. And in fact, right as I'm speaking, there's an XTC event in Brazil right now. So it's very global, very diverse. And the goal is to select entrepreneurs around the world that are really awesome and to basically support them in engaging with corporates. We also have special categories as well. So for example, there's one of the awards is actually a Female Founder Award, right? When we heard about the topic of diversity. So XTC certainly wants to sponsor that as well. It's pretty exciting, actually. And there's multiple ways for entrepreneurs. I encourage all of them to take a look if they want to apply for this. Corporates and even other VCs can be a part of it. We're always looking for judges and panelists and people to coach the startups. If anybody wants to get involved, check out the website and please feel free to reach out. And we're, it's been super successful. We've had actually several, I think it's a couple of thousand applicants now since we started in 2019. And we know 2021 will be a really big year for XTC.
Well, thanks for that overview. My wheels are turning about the inclusion of XTC in the Impact Global Venture Summit. We're now planning the in-person event for later in 2021. So maybe an opportunity to collaborate with that group. We've historically had a women's business forums, and we've had some ideas about women's business competitions and some of the other things that they're working on might be a great sort of collaborative opportunity. So thanks for mentioning that. And candidly, JC, thanks for enlightening me and educating me over the last few years on not only what Samsung's doing, but what the corporate venture community is doing. I've interviewed, Salesforce and Baidu and, and a number of other corporate venture groups. And I can say in all honesty that I think I've learned more from you than any one corporate venture group. So I really appreciate the time that you've invested in us and in me to enlighten me on the space. It's been great.
Jack, you're too kind, and it's my pleasure.
Kelly, last question for you. Okay, we're operating in this sort of crazy environment right now. COVID, the economic environment, the elections, all this craziness. Can you talk a little bit about sort of the environment? Is it, in your view, creating more risk for seed and early stage investing, or more opportunity, or some blend of both? I mean, your perspective is pretty important here. I'd be interested to have you comment on that.
Well, I think there's a big distinction in what you said there, early stage venture versus late stage. I think there's a ton of late stage committed capital that's not going anywhere, right? It's there, it's committed, it's for follow-on use. And so I think that insulates the early stage to a degree, because the capital is there for the companies to support them as they grow. I think that seed in general, you can't time innovation. Our funds, we capture 3 vintage years of venture funds. The underlying funds capture 3 vintage years. So our funds are 6 vintage years. We think you can't time innovation. So time diversification is key. We think it's important our managers continue at a consistent pace always, again. But there are things that happen on a macro level, looking back to 2008, 2009 during the recession. You have Uber, Slack, Square, WhatsApp, Pinterest, Airbnb, all started during that period. Well, there's also the big mobile, smartphones that came out. So that was the tailwinds happening there. As much as you have a bad time right now, the disruption is happening and things are going to have an opportunity to be greenfield and rebuilt. It's not just work from home. You see the tailwinds in digital health. You see commercial real estate is going to have to be rethought of. Retail, there's so many opportunities right now to disrupt. And the thing that seed companies have right now for the next vintage coming for them is that they're going to be starting their companies and building out their teams remote first or in this environment. So you're not going to have to go undo or rebuild or take time, a year, lose a year of capital, lose time. It's really an opportunity to build. And as people are, at home more, there's more opportunity for people, especially at the earliest stages, to be building products and iterating on the products more. So I think, honestly, we think it's going to be a great vintage for seed. And again, I make that distinction because I think we could need to dive into the life cycle funds and growth funds separately. But for seed, we think it's if you look back at 2008, 2009, you can't compare the devastation because this one is physical and emotional and health impacts, but we think that the disruption of the overall economy, marketplaces, provides for opportunities right now.
Thanks for your perspective on that, Kelly. I really appreciate it. Let me take a moment here and say to you, Kelly, I know Sendana is a small LP in Fund 1, but you've been particularly helpful over the last few months as we've been fine tuning our strategy. And I just wanted to take a moment and personally say thank you to you, because I sort of feel like outside of your role at Sendana, you've made time for me on short notice to brainstorm about different things and provide me with some candid perspective from your lens. And we're operating in a crazy environment, and you being readily accessible for a couple of brainstorming sessions for me over the last couple of months has been greatly appreciated. So thanks for your time today, and thanks for making time for me over the last couple of months. I appreciate it.